Hello everyone, I hope you're all having a great week. My name is Drew, the host of Never Behind. Has the up and downs of the market caused you a lot of stress this year? Today I've invited a special guest that has gone through several market crashes and recessions, but has made a fortune in the stock market and is one of the well-known legendary investors, Jim Rogers. Personally, whenever the market is unstable like the one we have today, it has been very helpful to listen to investors like Jim who have been through several ups and downs and know how not to be distracted from the hype and news, and thought his wisdom and insights for the market of 2023 and 2024 would be a great resource to my subscribers. Although the interview was planned for 30 minutes, since we had so many great insights shared during our discussions, the interview lasted for over an hour, so I edited the interview into two parts, focusing on the most important insights. So on part 1, Jim shares his insights on why he thinks the market keeps going up, although the US economy still has many issues, and if he believes that we will bypass this period with a soft landing as the Fed says, or if there has to be a hard landing before we start a new bull run, and also if he thinks the inflation will keep coming down to 2%, or if there is a possibility that inflation starts to go back up again. And of course, what he sees might happen in 2024 due to the upcoming election. Now, on the second part of the interview, Jim shares whether he invests in high-yield bonds, or if not, what the biggest portion of his investment is in. Also, he shares how much percent of his assets are in cash, and the possibility of a melt-up, and also whether he is shorting the market or not, and what sign he keeps an eye on for confirmation of a market crash getting really close. I am pretty sure that this interview will be very helpful for your personal investment, and highly recommend that you watch both part 1 and part 2 of the interview today and tomorrow. I will be removing all the ads that I have access to so that it doesn't interrupt with the interview. Now, before we get into the interview, I wanted to share that Seeking Alpha is having a great promotion, providing the premium service that was $239 a year all the way down to $167. And I've also shared an interview with the founder of Seeking Alpha Quant System showing how he uses the Seeking Alpha platform to find the best 10 stocks in specific industries. So if you're interested in Seeking Alpha, please make sure you check the video on how to use the platform to find great companies to invest in. And also use the link in the description below in order to get the great discount. I have also started a Discord that is 100% free and have great investors regarding stocks, options, swing trading, chart analysis, and even cryptocurrencies sharing their ideas and opportunities for investments every day. So if you are interested in being a part of the community, please click the link Discord in the description below. Hello everyone, I'm honored to have one of the greatest known legendary investor of all times, Jim Rogers, on our channel once again. And I'm sure if you have been investing for some time in the stock market now, it would almost be impossible not to know who Jim is. And I thought it would be very helpful to hear Jim's insights on today's market, especially since he has gone through several market crashes and recessions that people are assuming will happen next year or in the very near future. So thank you very much for your time today, Jim.
Well, Andrew, I'm delighted to be here. Good morning here, good evening there.
So I personally had a question that I couldn't figure out and would love to hear your thoughts on it. So although the market keeps going up, I see so many issues in the economy personally, such as still having high inflation that is causing the credit card debt at the highest level in the US history and making situations more worse. I personally think that inflation is not over. It may go higher again. We also have high Fed fund rates that are causing issues for so many companies and also banks, which is, I think, leading to massive layoffs for, the corporations to survive as a company. We also are seeing that banks have approximately, I think, $650 billion unrealized losses due to the fall of the bond prices. And commercial real estate also seems to be in a tough situation with over 1.2 trillion in debt, where 70% of the loans are from regional banks. And if they default, I can see the possibility of so many banks falling as well. With these realistic problems, I would really love to hear your thoughts on why the market is still going up.
Well, Andrew, central banks, by the way, your assessment is exactly right. And when we finally face reality, it's going to be the worst in my lifetime, worst in your lifetime too. We had a problem in 2008 because of too much debt. Andrew, since 2008, the debt has skyrocketed everywhere. Even China has a lot of debt. China bailed the world out in 2008, but now even China has is dead. So I don't know who's left, who can save us. So your assessment is right. The next time it's going to be a very, very serious problem. And the question is when. And by the way, the reason I know you're right is because the Federal Reserve says, oh, don't worry, everything's okay. Those guys have never been right about it. Well, we had a couple of good Fed chairmen in history, but the Fed's been around for over 100 years. So two out of all that time is not a good batting average, not a good record. So we're going to have serious problems. The question is when, as you well know. I guess everybody should watch Andrew to find out when. It seems to be coming. I see various signs. We see interest rates going higher. We see inflation going higher. We see lots of new investors coming in and saying this is an easy way to make money. I mean, all the classic signs are rising. Well, watch your show to find out when.
So the inflation has been coming down, but I think it's climbing up again recently. But do you think that the inflation, because it was like 9.1% in I think June 2022, but it's down to like 3.9% or approximately around 4%. Do you think that the inflation is being taken care of by the Fed, and the Fed at the FOMC meeting keeps saying that the soft landing is working and they are on track and you don't have to worry that much? Do you have faith in the Fed?
Well, Andrew, I'll repeat what I've said to you before. Most of the guys at the Federal Reserve do not know what they're doing. You know, they couldn't get a real job, so they get a government job. That's why they're working for the government, for goodness sakes. And I hope you know that their track record is abysmal over the past many decades, and it's abysmal again. That's how I know we have problems, because they say everything's under control. And as far as inflation is concerned, they say there's not much inflation. They say it's coming down. The government is telling us that. But people call me or write me all the time and say, where do these guys shop? Prices are going up. Prices are high. And the way markets work, as you well know, Andrew, you go up, you correct, you go up, you correct. And that's what's happening with inflation too. They took some measures. Now we're having the normal correction, the normal reaction. But don't worry, inflation will be back.
So you're anticipating that we will have the inflation going up again. And do you see that happening soon in the future? Because a lot of people around me are saying that don't worry about inflation, it's coming down. So I'd love to hear, your thoughts on what you think about the inflation.
No, of course it's coming back. We have various and sundry conditions around the world, including money printing everywhere, everywhere. There's huge amounts of money printing going on. That will probably continue. Nothing goes straight up or straight down, but there will be corrections along the way. But I look out the window and I see all the central banks printing money. The U.S. has slowed down, yes, but you think those guys are going to... Andrew, when things get bad, or when they think things are bad, you think they're going to say, oh, okay, we made a mistake. We give up. We resign. Ha! They're not going to resign. They're going to print money faster and faster and faster and blame it on you. They're going to blame it on somebody, maybe not you, but they're going to blame it on somebody.
So I think an interesting thing about 2024 is I think there's so many people that anticipated a crash in 2023, which didn't happen. And then a lot of people are saying that we are heading for another crash in 2024. But we do have the election next year. And I would love to hear your thoughts if you think that there is a manipulation happening for the political reasons for the elections. So in other words, if we did not have the election next year, do you think we should have been in a recession already, looking at the economy today?
Well, if you go back and look at markets or economies during historically, every year before an election in the US, the market has been strong because everybody knows that an election coming and everybody in the government does their best to make everybody happy. It's happening again, and usually or often what will then happen, of course, as we get closer to the election, there's not much more they can do. And as you know, the market looks ahead, the market discounts. One of the beauties of the market is it can see a lot further out than politicians. It can see a lot further out than all of us. So the market will start getting weak again. So I would suspect that next year things will start getting bad. We see the signs now, but the election they're gearing up. Washington is gearing up for the elections. They don't care about you and me. They care about the election.
Right, right. I totally agree on that. So I guess based on your experience in the market, the recession almost never happens, I guess, during the election years because they want to, keep the people happy and get elected and all that. So I guess in 2024, there might be a recession, but it's not that realistic that we might have one in the early part or maybe even on 2024, I guess.
We've always had recessions every few years. There's nothing magic about that statement. It's just something that's always happened, not just in the US, but all over the world. Politicians and academics and many people have tried to stop it, but so far nobody's found a cure a way to prevent recessions anywhere in the world. So, Andrew, it's coming. Yes, it's already the longest period in American history without a major recession. So we're overdue time-wise. Now, maybe it's different now. Maybe this is going to last forever. And if you speak to the Federal Reserve or the central bank, they will tell you, don't worry. We know what we're doing. We've solved the problem. And the Secretary of the Treasury says the same thing. She's got degrees from 2 Ivy League schools. Maybe she knows what she's talking about, but I doubt it.
So then in your case, I'm just curious, since the market is going up these days and a number of stocks are going up, in a market like this where the trend is heading high, do you personally invest and take advantage of the trend going up? Or are you more cautious because you see a lot of companies that are overvalued and are more on the side of keeping cash and just waiting to see how the stock market does?
Well, I have sold sold nearly everything. I mean, I still have a few things here and there, but no, I have sold out partly because I'm lazy. Trying to cut time the all-time high, it takes a lot of work. So I'm lazy, so I have cut back enormously early, obviously, but it's better to be early than late. And if you don't know that rule, try it a few times and you will learn it's much better to be too early than too late.
Since you said you were out of a major part of your assets or stocks, since the bond yields are over like 5% these days, with the cash, do you park your money into the high yield bonds to take advantage of that interest rate, or do you not personally buy any bonds for your investments?
It is US dollars at the moment. It is in money market funds, essentially, because that's the easy way for me. I'm not positive on bonds. In 1980, when we had a problem like this before, interest rates on treasury bills were 21%. That's not a typo. 21% in 1980, coming out of the long inflationary bubble. So interest rates can go much, much higher. You said they're high. Well, 5% was high once upon a time, but in the last few decades, the world has learned to have much higher interest rates, and we will have them again.
So you are anticipating that the interest rate on the bonds might go a lot higher than 5% in the near future?
I would like to find something else, but that's the best thing right now.
Would you be, shorting the market in any way at this point if you see a market crash coming soon? Would there be a sign that you keep an eye on that you're convinced that we're finally at the stage where we're having a crash?
Well, one prediction I will make for you is we will have a